Hello, good evening, ladies and gentlemen, distinguished guests, policymakers. It's really a great pleasure and honor being here today. I was being mobbed by a few friends and colleagues out there, wanted to talk about what's going on in Israel and the world. I come regularly to Israel. I have friends, I have family here. It's a great country. It's such a pleasure being here every time, and I'm always touched by the warmth and the hospitality of people. So thanks so much for inviting me, IDC and all the members here, the President, Alex, and others. So I would like to talk to you today about the global economy, but try to connect to the topic that was suggested to me, to try to understand how much the political and social turmoil in the Middle East is having an impact not only on the Middle East, but also on the global economy and financial markets. So I'm going to talking about the world, and then try to zoom in on how much some of the turmoil in the Middle East and other countries in the region has an economic and financial impact. I'll leave a little bit of time at the end for Q&A because I enjoy the interaction, so I think that I'll speak for a little bit more than half an hour, and then hopefully we'll have some time for discussion. People ask you usually how you characterize the global economy, and it's not easy. You have 180 countries, some of them are better, some of them are worse. The IMF recently in their World Economic Outlook referred to the global economy as being into the new mediocre, because there is mediocre economic growth both in advanced economies and emerging markets. I was recently in China, where they are characterizing their own economic growth as being the new normal, a new normal of growth of only 7% as opposed to the 10% plus of the last decade. And the term new normal has been also used by people like the folks at PIMCO, who is one of the largest asset managers in the world, to characterize this new normal of global economic growth. If I had instead to characterize the global economy rather than calling it the new normal, I would call it the new abnormal. Why new abnormal? Because there is lots of things that are uncertain, there are lots of things that are risky, there are lots of things that we don't understand, that are puzzles and ambiguities in what's happening both in the economy and the financial markets. So we'll elaborate on some of these new abnormalities, trying to understand them, and then zoom in also in some of the things that are happening in the energy markets in the Middle East and this part of the world. First observation of why this is an abnormal world is that the traditional stereotypes about the global economy that people had for the last few years turn out to be wrong. For a while people said emerging markets are going to grow very, very robustly, the BRICS and other countries, while advanced economies, developed markets, are going to grow weakly. That was true after the global financial crisis, but in the last 2 years there has been a sharp slowdown of growth in many emerging market economies, while there has been a pickup of growth in advanced economies. So the growth differential between EM and developed market has been narrowing rather than widening. So that stereotype turned out to be wrong. For a while people said the BRICS, this group of countries, Brazil, Russia, India, and China, and then they added also South Africa to this group lately, they said the BRICS are going to be growing so fast, faster than anybody else, they're going to become the largest share of the global economy, they're going to run the world. But look at these BRICS today. This year, 2 of these BRICS are going to be in a recession, Brazil and Russia. A third country, South Africa, has had mediocre economic growth for the last few years, and this year is going to grow barely 2%. China is sharply slowing down from 10% towards 7%, in my view, below 7%. And now, under Modi, India is having an acceleration of growth. But even the first year of the new Prime Minister shows that the kind of economic reforms that are needed to increase the potential growth of India are hard to make. So I think people are positive about India and positive about India, but I think they're too positive. It's going to be difficult in a democracy like India to do all these reforms. So this story about BRICS is fizzling out. Or to think about the Eurozone. For a while people said the Eurozone, the stereotype is there is the core, Germany and other countries strong, the periphery, they call them pigs, Portugal, Italy, Ireland, Greece, Spain are a disaster. But even that kind of stereotype is not true any longer. Within the periphery of the Eurozone, Greece is, of course, a mess, and I was just, right before I came to Tel Aviv for 2 days in Athens. But other countries are doing better. Ireland is doing better. Spain is doing better. Italy is still a mixed bag. So talking about the periphery of the Eurozone as being homogeneous is wrong. And when you look at the core of the Eurozone, Germany has structural fundamentals that are strong, but a country like France was done very little in terms of austerity, in terms of reforms, in terms of regaining competitiveness is fragile. So the stereotypes of saying that the core is strong, the periphery is weak, is not true any longer. And the final stereotype that turned out to be wrong is that if you ask most economists at the beginning of this year what's going to happen in advanced economies, the stereotype was the United States and the United Kingdom are going to have robust growth above trend, 3%, while of course Eurozone and Japan are going to be very weak and fragile in near deflation and near recession. But look at the latest economic data. In the first quarter of this year, the United States has surprised on the downside, actually had negative economic growth, while in the Eurozone, thanks to the policies of the European Central Bank of quantitative easing, there is now a cyclical recovery of the Eurozone. And therefore, the Eurozone now is growing faster than the United States. 6 months ago, people had said the Eurozone is in a near recession, double dip, triple dip, the US is going to do well. So lots of surprises, lots of stereotypes that turn out to be wrong. The other thing that is puzzling and makes this global economy a new abnormal is that who would have thought 6, 7 years after the global financial crisis that we'll be still in a world where very, very unconventional monetary policy will be still the rule in most advanced economies, from US to Europe to Japan to the United Kingdom. There are terms that did not even exist in the economic or the policy vocabulary 7 years ago. Who would have heard the term ZIRP? Zero interest rate policy. Now all the major central banks are at zero. Would have thought of the term QE, quantitative easing. Would have known of the term CE, credit easing. How about the term FG, forward guidance, the commitment to maintain interest rates low for longer. And now the new and the most, how to say, unusual new terms in the jargon of central banks, NDR, negative deposit rates, negative policy rates. Would have thought that you could have negative, let alone zero. Now there are people who are lending you money for negative interest rates, not only on the short end, but there are about 2 trillion to 3 trillion government bonds in the Eurozone, in Europe and Japan that today have a negative yield in nominal terms. This is the weird world that we're in. So that's another surprise that these unconventional monetary policies are now the rule. Additional puzzle. Some people, I call them Austrian economists or gold bags or radical monetarists, thought that all this liquidity, because central banks have doubled, tripled, quadrupled with quantitative easing, the base money, they said is going to lead to high inflation or hyperinflation, is going to lead to a collapse of the value of the dollar, is going to push long-term interest rates to very high level, is going to lead to the value of gold to go through the roof. And they said it's going to lead to these fiat currencies that are being debased by central banks to be replaced by alternative monies, cryptocurrency like Bitcoin. This was the prediction that a few economists were making a few years ago. But look at the last 2 years. Inflation not only is low, but it's becoming lower. There is the risk of near deflation in Japan and in the Eurozone, but even the US and UK, they're doing better. They're fighting near deflation. Long-term yields that were supposed to go higher, they've gone lower and lower and lower. In some cases, they're negative. The value of the dollar, instead of collapsing, has been surging for the last 2 years. Gold prices, they've fallen by 50% in value, from 1,900 per ounce to 1,200 per ounce. And last year, the worst performing currency in the world, if you can call it a currency, was Bitcoin, that lost 2/3 of its value. So much for the prediction that all this liquidity would cause massive inflation and debasement of fiat currency. And why that was the case? It was the case because people misunderstood the relationship between money and prices. The traditional view was, if you print lots of money, it's going to chase goods and cause inflation. But the logic is the opposite. We live in a world in which, after the global financial crisis, growth is weak. There is a slack in the goods market. Firms don't have pricing power. There is a slack in the labor market. Unemployment rate is still well above the natural rate, the structural. There is now a slack in energy and commodity prices. So there are disinflationary, if not deflationary forces. And since in macro policy, fiscal policy is constrained by political constraints of not being able to do more stimulus with large deficits and debt, the only game in town to prevent a recession, double dips, low inflation or deflation is monetary policy. And once you reach zero policy rates, and that's not enough, of course you have to go into unconventional, But the unconventional policies do not cause inflation, they just prevent deflationary pressure from setting it in. So the causality is not that too much money causes too much inflation, but lack of inflation forces to go in printing too much money to prevent that deflation from occurring. So that's another puzzle. Another puzzle, of course, about the global economy last year has been the behavior of oil prices and then the consequences of oil prices. First question, puzzle, why oil prices fell so much, so fast, so soon, from 110 down to 45, and even now they're closer to 60. Very few people, almost nobody, saw it coming. Secondly, the other puzzle is while the growth impact of the fall in oil prices on the global economy is so small, because most people would have thought that there will be a positive growth impact of lower oil prices. Why? Of course, when prices of oil fall, there are losers and winners. Losers are oil-producing economies. Winners are net oil-importing economies. And within the oil-importing economies, of course, the losers are producers of oil, like in the US where there is a large production of oil, and the gainers are, of course, consumers. Now, while there are losers and winners because of the low oil prices, globally, it's a net win for the global economy, because when oil prices fall, you are redistributing income from those who have a high marginal propensity to save, that tend to be the oil exporting countries, to those that have a higher marginal propensity to spend and consume, that are the oil importing countries. And if you look at the major regions of the world, some of the leading economies of the world are net oil importer. Look at it, United States, Eurozone, Japan, China, India, Taiwan, Korea, Turkey, Israel, and many other emerging markets and advanced economies. So we would have thought that the fall in oil prices, whatever the cause was of it, will lead to stronger global growth, but so far the consumers in the United States have been saving that increase in their disposable income, have not been spending it, and one of the reasons why growth in the US has been weak for the last couple of quarters, in spite of low oil prices, there has been a massive surge in the savings rate. People are puzzling. Disposable income is going up, consumption is not going up as much, and people are saving. Why suddenly there has been that? The other puzzle about the oil market is that, as we know, the Middle East is on fire. I mean, all the way, if you start in Algeria and you go to Afpak, Afghanistan and Pakistan, there is turmoil. And in spite of that, we have not seen not only any fear premium recently in oil prices, but we've seen actually a very sharp fall in oil prices. And that may lead me to try to think about what's going on in the Middle East and what's going on in the energy and the oil market. First observation about the Middle East. From a social and political and geopolitical point of view, you know it better. You're living in a terrible neighborhood. You have a bunch of failed states: Syria, Iraq, Yemen, Libya. There are states that are now falling apart, disgregating politically and otherwise. You have a whole instability arc that started with the countries of the Arab Spring, that are Egypt, Tunisia, and others, that eventually have not led to social stability, but more economic and financial and political instability. Of course, you have Iran, that is a threat to his own people and threat to Israel and other parts of the Arab world that is Sunni, and is an issue that you have to address. You have the turmoil that in a number of these economies and countries, you have a minority of Shias that are supported by Iran that are causing trouble. It's happening, of course, in Lebanon, it's happening in Syria, it's happening in Iraq, it's happening even in Saudi Arabia, where the eastern province where the oil is produced is predominantly Shia, it's happening in Bahrain. So you start with all the way going to the Maghreb and Algeria down to the Sahel, and there's an arc of instability that goes throughout the Middle East all the way to Afpak, Afghanistan and Pakistan, that are also troubled economies, and politically and socially. In spite of that, and in spite of all this turmoil in the Middle East, as you know, last year, oil prices were collapsing. In the past, whenever there is turmoil in the Middle East, people say that leads to a fear premium and a spike of oil prices. So what has happened? The first observation I'll make is the following one. In the past, whenever there was a geopolitical shock in the Middle East, that was associated with an actual threat to the supply of oil. As you well remember, and I was actually a young teenager, I remember the Yom Kippur. between Israel and Arab state, not only was a war, but as you know, after that war or during the war, there was a sharp embargo that the Arab state imposed on the US and European countries that led to a tripling of oil prices. So this was just a geopolitical shock that affected the supply of oil and then led to that sharp increase in oil prices that caused a global recession and a rise in inflation, what people refer to as stagflation, recession and inflation. The first one in 1974-75. The second oil shock followed, again, the Iranian Revolution in 1979 that led to another embargo of oil from the new revolutionary regime that led to another spike in oil prices that caused the US and the global recession of 1980-82. Again, high inflation and recession. And the third geopolitical shock that affected oil market, of course, was the 1990 invasion of Kuwait by Iraq that also led to a shock to the production of oil for 9 months in Kuwait and led to a spike in oil prices. And together with other factors like the banking bust in the United States following the S&L crisis, it caused a recession in the United States and Europe. So you had three major shocks to oil prices that led to recession and inflation in advanced economies. So the difference is this time around, there is massive turmoil in the Middle East, but that has not led to a spike in oil prices, that's not led to a fear premium, has led instead to a fall in oil prices. Why that has happened? It has happened because, first of all, while the Middle East might be on fire, there is not yet any one of these individual major producers of oil that has a shock to its supply of oil. We have not had the equivalent of what happened after the Yom Kippur War or the Iranian Revolution or the Iraqi invasion of Kuwait. There is no shock to the supply of oil from the Middle East. There is still plenty of production. Yeah, for a few months the production of Libya was offline, but it's coming back. And another small producer had a little bit of a shock, but you have not had a major producer having a shock. First observation. Secondly, we had the shale gas and oil revolution in North America, from the United States to Canada and now Mexico. Plus there is plenty of oil, traditional, non-traditional, in many other parts of the world. Look at Latin America, where from Colombia to Venezuela, all the way to Brazil, but even shale gas in Argentina. I was recently in East Africa, where there is an arc of countries starting in Kenya, and then Uganda and others, all the way to Mozambique, that find a lot of oil onshore and offshore. So there has been a major revolution that has led to a significant increase in the supply of oil. So not only there is not a shock to the supply that is negative, but you have had a significant positive supply to the production and the supply of oil that implies that while the Middle East might be burning, this is not having anything like an embargo or a shock that is negative to the supply of oil. And you have had the paradox of oil prices falling. Of course, last year, in addition to the upside surprise coming from more shale gas and oil production in the United States, there was also a negative surprise because the economic weakness in the Eurozone, in Japan, in China, and in many emerging markets led to also a slowdown in the growth of demand. So less growth of demand, much more oil supply, you have a collapse in oil prices in spite of all the political problems in the Middle East. Now, another important question you might want to ask to yourself if you're thinking about what's going to happen to oil prices is, what are the goals of Saudi Arabia? Is it just that the decision of Saudi Arabia to maintain the production within OPEC, not to reduce it, last fall reconfirmed recently? Is it driven by economic and financial consideration, or is it driven by political or geopolitical goals? Some people have said that what Saudi Arabia is trying to do is to try to hurt its geopolitical enemies, being Iran or Russia or other. My interpretation of what the Saudis are doing is that their main objectives are economic and financial, even if, of course, as a byproduct of their action, there may be also economic damage to countries that are not friendly to Saudi Arabia, like Russia or Iran. But the main consideration is not political, but is also economic and financial. The way I think about the behavior of Saudi Arabia, and that explains what they're doing, is that it's the behavior of a typical oligopolistic leader in an industry. When you have an oligopoly that is dominant producer, that is behaving like a predatory producer. Why? Think of what happened to the oil market. You had the rise of shale gas and oil producer, the rise of production outside of OPEC of high marginal cost producers. This was a threat to the profit and the market share of Saudi Arabia. So Saudi Arabia did two things. First of all, you maintain the supply of oil from OPEC same as before. That leads to a collapse of prices. That collapse of prices over time leads to a reduction of production by high marginal cost producers. Guess what now? In the US, the number of oil rigs in the shale gas industry and oil has been fallen. We've allowed there'll be a reduction in production. And those who are high marginal cost producers outside of OPEC will be forced over time with low oil prices to produce less. So that's the first thing. The second thing that the oligopolistic producer does is to commit to a schedule of capital spending, of investing into new capacity, and if you commit to do more capacity yourself, all the other producers that are high marginal cost producer will do less capital spending, because if everybody does too much investment into new oil, then there'll be excess capacity, prices collapse, Saudi Arabia will survive, but the high marginal cost producers are going to lose money. So by committing to your investment schedule, you're forcing everybody else to do underinvestment. Guess what? Every major producer in the world, apart from Saudi Arabia, and a major oil company in the world, including large ones, have decided to cut back their capital spending in new exploration by 20 to 30%. And with a lag of 3 to 5 years, because of course there's a lag between your capital spending and future production, you're going to have a reduction in future production. So essentially, you're getting rid today of the high marginal cost producers. You're eventually having essentially less capital spending, and therefore your market share is going to increase, and gradually oil prices are going to go higher. In my view, they're going to go higher, but not as high as they were before. I can see oil prices, say, Brent averaging this year around $58 a barrel and finishing above 60. Next year, maybe averaging $68 a barrel and finishing around 70. And if you had to give you a guess, and of course economists have been wrong, of what oil prices are going to be for the rest of the decade, I would say between $70 to $75 a barrel. So they'll be higher than they are today, but only marginally higher, and they're not going to go back to $100 or $110 per barrel. That was the level they had before. That's my baseline. Of course, some people disagree. You can tell scenarios in which oil is going to go towards 100, I think unlikely. And there are also scenarios that you hear some people in the financial industry telling you on why oil prices are going to stay around $50, $55 per barrel for the rest of the decade. The argument those people make is that the OPEC producers are not producing less, they're going to produce more from Saudi Arabia, but also Iraq, eventually Iran, and even Russia. These are low-cost producers producing more, while those that are outside of OPEC who have high cost of production are not producing less because they're desperate to increase revenues. So even with low oil prices, they're producing more. And the second argument people make is to say that there is so much productivity increases in the shale gas and oil industry in the US, 10% per year, that over the next 5 years, the cost of production is going to fall by 50%, so the marginal cost is going to fall, and therefore the break-even for shale oil in US is going to be much lower than it is today. Therefore, shale production in US is not going to fall. If you leave those stories, then you can tell a story on one oil by the end of the decade is going to be $50 per barrel as opposed to my 75. The honest answer is we don't know which one of them is going to be. And some of it also depends on geopolitical developments in the Middle East, like whether there will be a deal with Iran, whether the deal is going to succeed, and whether sanctions in Iran are going to be phased out, and how fast Iran is going to be able to ramp up its production of oil with new capacity in the next few years. So a lot depends also on not just economic, but also political observations. I would say another point about Iran. The impact of the reduction of sanctions, assuming there'll be a deal, because there is not yet a full deal, as we will know, on production this year is going to be small. Maybe Iran is going to be able, given a slow phase out of sanctions, to increase its production by about 200,000 barrels per day. By next year, it might be more 500,000 barrels. Conditional on a deal that sticks, and that's a big if. Over the medium term, of course, the production by Iran could increase by at least 1 million barrels a day, and over the medium long term, if they do massive investment in new capacity, the number could be even larger than that. So if there will be a deal that sticks with Iran, if sanctions are going to be phased out, however gradually over time, over the medium term, of course, the return to greater production in Iran is going to be a significant impact, increasing the supply and keeping oil prices from rising much more than that. Whether that's going to happen or not, of course, is anybody's guesses. The other point I'll make, I talked about political turmoil in the Middle East and how much what's going on in the Middle East or in Iran, in Saudi Arabia, has an impact or not on oil prices. The other story, of course, is Russia and Russia-Ukraine. Because currently the frozen between Russia and Ukraine, the conflict is sort of frozen. If it stays frozen, I would say the willingness of Europeans to continue the sanction is limited. You can see a situation in which the sanction will be phased out in the next year or so. Even if those sanctions were not to be phased out, as long as the conflict remains, frozen, there will not be an increase on those sanctions by the US, the West against Russia. And therefore, while of course the conflict between Russia and Ukraine has been a source of geopolitical conflict, the impact on the economy of the Eurozone and the impact on financial markets so far has been limited. Why has been limited? Because of course there is a tension there, but that has not led to a shock to the supply of gas from Russia to Europe. Both sides realize that if there was that cutoff, will be damaging the Eurozone that depends still on gas coming from Russia. And of course Russia depends on significant amounts of export of its gas to the European Union. Eventually, of course, over time, if the tension between Europe and Russia were to remain, there will be pipeline built to ship the gas from Russia towards the east, towards China and the east. But so far, both sides essentially need each other gas. And therefore, as long as the conflict is frozen, there's not going to be a shock to the supply of gas. There's not going to even a shock to the supply of gas from Russia to Ukraine. And therefore, while this turmoil, politically and otherwise, is significant, it has not had an effect on the supply of gas and therefore on the price of gas. That's another element that has to be kept in mind. You have geopolitical conflicts from the Middle East to Russia and Ukraine, but as long as they don't imply a shock to the supply of oil or the supply of gas to the rest of the world, their impact is going to be limited. Now, some people cynically say, therefore, we should not care about the turmoil in the Middle East. Who cares whether the Shia and Sunni are slaughtering each other? Let them slaughter each other. It's going to also distract from other problems, like the fact that, of course, Israel has to deal still with its own Palestinian problem. Let's ignore it, because it's not going to have any impact economically as long as there is not a shock to the supply of oil. So some people say, laissez-faire, let's not care about. I think that while so far the Middle Eastern turmoil, all the way, as I said, from Algeria to Afpak, has not an effect on the supply of oil, there are plenty of reasons that you have to worry about, that if this turmoil, this violence, this civil war fester, eventually there'll be an economic and other impact. First of all, if these conflicts continue, if people are right and we're at the beginning of a 30-year war between Sunni and Shiite, the same one that existed in the 17th century in Europe between Protestants and Catholics, there'll be violence, there'll be civil war, there'll be even more failed states. And failed states, by definition, are a source of internal and external instability. You still have massive amounts of poverty, of underemployment in the Middle East. If you're going to have a bunch of failed states, you'll have people, millions of people becoming miserable, becoming more poor, more unemployed, more desperate. Secondly, that turmoil and the civil war leads to millions of refugees. Think about the impact that the civil war in Syria has had in terms of millions of refugees going to Lebanon, going to Jordan. I was just recently in Turkey, where in the eastern part of Turkey you have almost 1 million Syrian refugees. It's a fiscal strain, it's an economic strain, it's a social strain. In Turkey, people locally say all these desperate Syrians are now being paid half as much wages and stealing our jobs. It's becoming a social problem. At which point millions of refugees are going to cause not only economic and fiscal, but eventually political instability in fragile states like Jordan, like Turkey, like Lebanon. That's one problem. Secondly, where do the refugees go? Those who can go to other parts of the Middle East, those who are willing to risk their lives and cross the Mediterranean, end up in Italy, end up in Greece, end up in Europe. And right now for Europe, this mass and surge of migrants coming from the Middle East and North Africa is becoming an economic and social problem when unemployment rate in the Eurozone is still 11%. The last thing you need is millions of people coming there. So that's going to cause instability and social and economic and fiscal problem in Eurozone and the rest of Europe. Additionally, we already know that throughout the Middle East there are millions of young people who are desperate, who are young, who are unemployed, who don't have skills, and even those who have skills cannot find the jobs. And we know that one of the triggers of the Arab Spring was exactly young unemployed youth There's a demographic bulge of people who become desperate, and they're going to cause revolutions. It happened in Tunisia, it happened in Egypt, and it happened so on. If these turmoils and this civil war will continue, you'll have millions or more of young people who have no hope, no future, no jobs, no income. They're going to become more desperate. They're going to cause more revolution, but also we know that people are young and desperate and have no hope. Eventually, they become terrorists, eventually become jihadists. So we could have an entire bulge and a generation of people that are going to be eventually finding a way to go to Europe and blow themselves up from Rome to Paris to London and eventually even the United States. So the US, Europe cannot ignore this mess in the Middle East, because if it's not going to be a shock to the supply of oil, could be festering jihadists and terrorists eventually through migration, to refugees, through terrorism are going to be a threat. And finally, while so far there has not been any threat to the supply of oil, some of these conflicts could develop in a way that could lead to the shock to the supply of oil. Look at the situation in Yemen, where these Houthis, while Shiite, supported by Iran, are taking an upper hand. That's why Saudi Arabia is so worried, because if Yemen were to be taken over by these Shiite fundamentalists, eventually the conflict could spread across the border to the eastern province of Saudi Arabia. And as you know, most of the production of oil in Saudi Arabia is occurring in the province that is eastern part of the country, and the majority of the population in that region is Shiite. Shiites that are restless. And today in Saudi Arabia, 40% of the young people are unemployed. The employment rate is 40%. Saudi Arabia is lucky to be a very rich country that has hundreds of billions of dollars of reserves, and they can buy out their people. They can keep the mobs at bay by giving them transfer payments. But with these low oil prices, for how many more years you can run budget deficits and keep people calm by doing that? That's not sustainable. Either you stabilize the situation economically, you give economic opportunity, you modernize Saudi Arabia, and you stabilize the region, or otherwise, Saudi Arabia, of course, could be the biggest time bomb, can lead also to massive instability that eventually is going to have a shock on the supply of oil. That leads me to the following conclusion. It'll be too naive for us to believe that as long as Shia and Sunni or other people are slaughtering each other in the Middle East, we'll be sheltered. We'll be sheltered as Israel, sheltered as Europe, and sheltered as the United States. Eventually, this conflict is going to have economic, social, political, and financial consequences. Of course, the solution of all these conflicts is very hard. In some cases, looks like mission impossible, but the question is that you cannot ignore it. Somehow, you have to stabilize the situation, because if you let them fester worse, eventually it's going to affect the rest of the world. They're not going to be sheltered or decoupled from it. A couple of other observations about other countries on the periphery of the Middle East. I was just in Turkey, spent 2 days in Ankara, met senior policymakers. As you know, there's an election today in Turkey. They're going to decide the results of that election. There is a scenario that I don't know whether it's likely or not, in which the AK party takes a supermajority that would allow then the President Erdogan to convert the country from a representative democracy to a presidential republic. And that scenario is also a scenario in which, if the Kurdish party doesn't get at least 10% of the vote and prevent that supermajority from occurring, you could have more political instability and terrorism. So that scenario actually is the one that is very fragile. And as you know, Turkey is still a NATO member, but is a fragile NATO member. And its relation with Israel, with Egypt, with many other parts of the Middle East have become much more frayed. Political instability that leads to economic stability in Turkey will be in nobody's interest, because you need a stable and moderate Turkey to make sure that other conflicts in the Middle East are also stabilized. We'll see what are the results of the election. We see whether Turkey remains democratic, we see whether the policymakers in Turkey are going to be moderate or not. That certainly is a source of potential instability also for the rest of the Middle East. Right before Turkey, I was also in Greece. I spent 2 days in Athens recently. And of course, one would say, who cares about Greece and this debate about potential Greek exit from the Eurozone? I think you have to worry about it for several reasons. Of course, if there was a Greek exit from the Eurozone, first of all, it'll be a disaster for Greece. You'll have collapse of the banks, collapse of the currency, going back to the drachma, economic and financial turmoil, first of all. Secondly, there'll be contagion to the rest of the Eurozone. People are going to say, who's going to be next? The Eurozone doesn't look anymore like a monetary union. There'll be potentially, over time, a domino effect. There'll be financial contagion you have to worry about. But in addition to the economic and financial contagion, you have also to think about the geopolitical consequences of a Greek exit from the Eurozone. That's why when I talk to sensible people in Berlin, in Rome, in Paris, they say this is not only about economics. After all, Greece is only 2% of the Eurozone GDP. It's also about geopolitics. Think of it this way. First of all, the Middle East, as we know, is in turmoil, and already had terrorist attacks coming to Europe, from France to Denmark, to those tourists killed in Tunisia. So that instability implies that Europe has to stick together. And if you don't do it, then Greece is going to be the conduit for millions of refugees going the rest of Europe. Secondly, as you know, Russia is becoming more aggressive in Ukraine, in the Baltics, but also in the Balkans. There is an arc of countries that are fragile who could end up under the influence of the Russian bear. It is in Moldova, it's in Bulgaria, it's in Hungary, it's in Serbia, it's now in Macedonia, and also in Greece. And Greece is also a NATO member, and that's why the United States is telling the Europeans, do what's necessary to find a compromise with Greece, but the last thing we want is that Greece exit the Eurozone, and after exiting the Eurozone, exit the European Union, and exit NATO, at the time where also the belonging of Turkey to NATO seems to be ambiguous or uncertain. So it's not just about economics, but it will be the beginning of unraveling of the Eurozone. It could be the beginning of unraveling also of the European Union. And one thing that is true about Europe is in a world of great powers like the United States, of rising powers like China and India, and maybe weaker powers that are becoming more aggressive like Russia, even a strong Germany alone is a geopolitical midget. And therefore, for Europe to stick together is important economically, because for Europe to have a leverage on global economic and political and geopolitical affairs, you have a united Eurozone and a united Europe that is stable, that is growing, that is providing jobs and income and opportunity. You saw what happened in the 1930s, where economic depression led eventually to financial crisis. Financial crisis led to the rise to power of authoritarian regimes, from Mussolini in Italy to Hitler in Germany to Franco in Spain. We're not yet there, but the economic turmoil of Europe, and if there was a disgregation of the Eurozone and of Europe, could have also social and political consequences that are going to be severe. So that's another element that has to be kept in mind. Greece matters also for the Middle East. I will finish also with some observation about the Israeli economy. First of all, I'm not an expert. Whenever I come to Israel, I listen to economists. Tomorrow I'll spend a day in Jerusalem meeting with some of the senior policymakers. I always want to learn. So I would not be able to give you deep insights. First observation I'll make is that the Israeli economy is very strong, is very resilient, even at the times where there was conflicts with his neighbor. I remember in 2006 when there was the war with Hezbollah, the economy and financial market were resilient. Even last summer when you had the rocket attacks, economy and financial market were resilient because it's a strong economy. There is an export sector, there is a tech sector, it's dynamic, entrepreneurial, and since a lot of the exports of Israel are done with the rest of the world, in some sense, even if you live in a bad neighborhood, you're being sheltered because you're a small open economy open to the rest of the world. And therefore, you can be sheltered from what's going on. Of course, however, that sheltering is only limited. If eventually the turmoil in the Middle East will become more severe, directly, indirectly, social and political turmoil will have an economic effect, let alone the security. If there was more turmoil in Jordan or in Turkey or in Lebanon and so on. Additionally, I will point out the following one. Today in the United States, there is some frothiness in financial markets. Some people also started to talk about a bubble in the financial markets, in the equity markets, even a new bubble in the tech sector. And you remember when there was the first internet revolution in the 90s, eventually became a real bubble. That bubble went into a bust, and that bust had economic and financial consequences. So while Israel has a number of amazingly tech companies that are world-class, of course, if a bubble in the tech sector would develop in the United States, in Europe, and in Israel, eventually that bubble could end up into a bust. And that bust could have economic and financial consequences. And I would also argue that the frothiness that you see in Israel in the housing market, where home prices are becoming higher and higher, and many people of middle class cannot afford any homes, is in part related to the fact that there is some frothiness in the financial system and some frothiness also in the tech sector. Hopefully, it's not going to turn into a bubble that goes bust, the tech and the housing, but certainly that's an element of vulnerability that you have to worry about. Additionally, I'll make two other observations. While there is a part of this economy that is amazingly dynamic, entrepreneurial, innovative, with a good chunk of the labor market, people are students in these universities and the top universities of Israel that are world-class, it's also a dual economy and a dual labor market. There might be 1/3 of the population is highly skilled, entrepreneurial, innovation, tech, and otherwise. But as you know, there's part of the population that are religious, or there are the Arab minority who doesn't have the human capital, the education, the skills. And that's becoming a fiscal drag, an economic drag, and eventually is a source of the rise of income and wealth inequality that becomes socially and politically a problem that you'll have to address. Final observation I'll make about Israel is, as you well know, there is this movement to try to boycott Israel and its goods and services, whether produced in Israel or in the territories, the BDS movement. Personally, I'm appalled by what's happening right now, and I think it's just disgusting, but you have to ask yourself, regardless of whether we think it's terrible or not, whether this movement is on the rise and whether it's going to have eventually a threat to the economic success of Israel. I've had the chance for the last few days to talk with many business leaders, heads of large companies, and they say, until now the impact was very small, but we do worry that especially in Europe, but also in other parts of the world, eventually people are going to start to boycott Israeli goods. They're going to impose sanctions and all the other things that are happening. And if that were to happen and become a real momentum, eventually, not today, could become a tsunami that, of course, is going to have a negative impact on the Israeli economy. Of course, you have to fight it, and fight it in all the ways you can, but many people realize that the solution also of the conflicts between Israel and the Palestinians will be at least helpful to prevent this thing from snowballing something more severe. I don't know how that resolution of that conflict is going to occur. That's up to Israelis to decide as a democracy what they do about it, but certainly while the turmoil in the Middle East is independent, what's happening in Yemen or Syria or Iraq or in Libya and Egypt from the Israeli-Arab conflict, the resolution of the Israeli-Palestinian conflict will imply more stability, openness of Israel to the rest of the Middle East, and giving economic and financial and social opportunities to the world. I know it takes two to tango to achieve peace, and both sides have had difficulty to achieve the peace, but we can only hope that that solution of that problem is going to occur. It's going to imply that Israel is going to remain a stable democracy, is going to become economically and financially successful, and there's going to be hope for the future of Israel and of its young people. It's always a pleasure being here. It's always great being among friends and family. I love this country, and I hope the best for Israel, for the Middle East, and for the world economy. Thanks very much for your attention.